Welcome to another trading video. Today we are going to discuss the week ahead, and we've identified several different Forex pairs that we are going to have on our watch list for this week coming. Now, before we get started with that, let's look back to the trades that we done the analysis on last week, and we will see if any of them played out. So we picked, I think it was 4 or 5 different Forex pairs, and we done an analysis on them. That was the last video. So now the week's played out, we will go through them firstly before getting to the week ahead. Please do stick around to the end of the video. I'm going to get a little bit more in depth into my strategy. I have in the past made a few videos, but skimming the surface, so we're going to go a little bit more in depth. So firstly, we were looking last week at, I believe it was gold, and we were looking for shorts on gold. So as you can see here, we're in the 4-hour chart. You can see here the big engulfing candle. We'll just get an arrow up here. So we've seen this big engulfing candle. We entered the trade here. We took a short position. It would have been down a little bit further, but we got out here. And the reason we got out was because of this level here. This area here was being respected. So we would have had a line drawn on the bottom of these, and as you can see, it matches up exactly. The reason also is with gold, you are not getting big retracements on it at the time. So we go back and look at previous retracements. You can see this one here. So we were conservative here, but it was a nice trade. That trade played out. It presented itself on Tuesday, I believe it was. So as well as being short on gold, we were long on oil. We've been in this position for since the Tuesday also. Yep, Tuesday also. So the reason we entered the oil trade, now oil for me is my safe place. If I've got a few losing trades, I go to oil all the time because it's where I have the most success. Looking back in my statistics, as we all do, or as we all should, oil is by far the biggest success rate for me. So I have a real feel for the oil market. This year, the 81 has been a price that's been respected several times. You can see this blue zone here. It keeps bouncing off it. But back here, we took a big dip below. So the next time we were a bit cautious here. We knew that maybe the 81 wouldn't be the area to enter at, and it would go down further. It's trying to create a new kind of support zone down here by the looks of it. If we just take out this area here, you can see that's now 2 bounces it's had off it. So we waited, and I think we entered on about 78. And we went into a good bit of 77. We went into a good bit of drawdown here. We went way down to 76. My stop loss for oil on the screen, you can see it's here sitting on about 75. But I don't have a stop loss on oil because I've got a real feel for the market, and I would let this go way down to 72. Then I would hedge my way into the trade to break even. But that's for another video. So just disregard this kind of stop loss here. So now we're in profit. We're up to 79 now. And we are looking to take our profit at about 84. But again, we're going to be very vigilant at this 81 region, where we've got this previous support and resistance. So we're going to stay in the trade, hopefully get to 84. But we may take some, we may close some of the trade at the 81 area. So that's 2 successful trades from last week. The next one was UJ, so the US dollar, Japanese yen. Still not took a trade on this. We just felt it had this big drop off here. This actually took 7 months to get from this area up to this area. We just draw. So this was 7 months it took to fill this area. and then in just 24 days it dropped off here, and I think it dropped about 10-15%. It was a massive drop, so we're waiting on this recovering. It looks as if we've made a higher low here, but then it's dipped below it and made lower lows. So we never entered a trade on this. We just don't like the structure. Certainly if it comes back down to this area, we'll be interested to take a long position. But yeah, you don't always get trades on it. We sat and watched it and nothing presented itself. So for the UJ, we never entered any trades last week. So GJ, the Great British Pound, pretty much the same happened here. We've got this area here. We just don't like the structure of it, but we're watching it because we know it's got this ground to make up. But yeah, nothing presented itself on GJ either. But it is two that we're still watching. I think the last one last week was the GBP CAD. If I recall, we said that we're watching Great British Pound CAD, but we didn't anticipate anything setting up. If we go into the weekly, we'll just close this channel. So if we go into the weekly here, I've just wrote some notes. GBP CAD is an area at 184 as a supply zone, last visited in March of 2018. We can see that here. This area was last visited in March 2018, and we're waiting for the price to reach the blue zone, so this kind of blue box here. We will wait a bearish signal on daily, or a 4-hour big wick or big engulfing candle. So we're waiting in this supply zone here. When we get here, you know the strategy. We are either waiting for a big rejection wick or a big engulfing candle. That would give us enough in this area. We are at an area of support and resistance. We're at a round psychological number. So the third thing is if we get a big wick or a big engulfing candle, that's 3 or 4 boxes ticked. We would enter a position. So the next one, we've still got this. We're still watching this for the week ahead. As you can see, it's still on our watch list. So our watch list for the week ahead is here. Now, bear in mind, I have got 2 active trades just now on oil and CAD JPY. It is a rule of mine that I never have any more than 2 trades open at the one time. Just having traded for years, again, going back and looking at your stats, my win rate goes way down if I've got a third trade on. So again, I do not have any more than 2 trades, no matter how good it looks. I will, and I have in the past, seen an A+ setup that I really like the look of, and it's what I've done is I've closed one of my active trades that's maybe in drawdown, or it's maybe consolidating, going sideways. So I will do that. I'll close a trade to enter another, but I'll never have more than 2 on at the one time. I never trade on a Friday either. Again, looking at my stats, Fridays are terrible days for me. I've got a terrible win rate, so I just made the decision I do not trade at all on a Friday. So my trading is a 4-day week. Analysis done either Saturday or Sunday. Entry on either Monday through Thursday, and I will not touch any positions on a Friday. I will close an active trade on a Friday, but I will not enter a trade on a Friday. So on to the next one here we're watching is the New Zealand Swiss franc. So we're coming to this area down here, which is a round psychological number, 0.5000. It's a massive psychological number. We just feel the market may bounce here for a slight retracement. We don't really like the look of this market. It has literally been going down since 2021. So we're not expecting, as you can see, the take profit isn't way up here at break of structure. We're just anticipating a retracement, and it may continue downward. So this is just a retracement trade. Again, our trading will obviously be big wicks, big tails, engulfing candles, at significant high points, significant low points, but it's not always reversal. In this instance, we're obviously doing a slight reversal. It's just a retracement of a continuation of a trade. So after this one plays out, we would potentially enter a position to go with the trade, to go with the trend, sorry. So our next pair is GU. So we've been watching this going all the way up here, and it's at a significant level here, the 135 supply zone. If we come to the weekly, again, someone mentioned in the comments, they don't I trade the daily anymore. So I do look at the weekly and daily. Just literally, when you get that used to trading, you're just, you look at it literally seconds to see if the market's bearish or bullish on the weekly and on the daily. And then you drill down to the 4 hour is where I enter my positions. So basically when I'm looking at charts, 99% of the time I'm on the 4 hour. But here, as you can see on the weekly, we're approaching an 18-month high. So over here was this area here, was when it was last at 134, 135 zone. So look left, we've got many bounces in this area. So you can see right back to here, this area has been respected as support and resistance as far back as 2016. And we've not been at this area since February of 2022. So this for us is a significant area. You can see the big candle here. We could actually push up into this area this week, just with even, 3/4 of the size of this candle. So if we go into the daily, you can see here it's making higher highs, higher lows. And if we go into the 4 hour, so this will be a reversal trade, 135 round psychological number. We are waiting on an engulfing candle or a big rejection wick in this area. What you could also do, you could also wait until this makes a higher low and a lower high, just for extra confirmation. But we will go in here at this zone because it's so close to a round psychological number of 135. So the next one is CAD CHF. We can see here week bearish, day bearish, 4 hour bearish. We've not broke structure here yet. So the previous resistance at 67 was tested several times. So you can see this area here. It's been tested a few times. We anticipate the same at 63. Sorry, so what I've said here, anticipate. So the previous resistance is 67. So this was this zone up here. So if we zoom, we can see that this market is in a clear bearish. If we go into the daily, you can see it's just been coming down since May of 2022. But what I said in my analysis is this area here at 67, once we came through this area, you can see here it respected it and it acted as resistance. So I'll just increase this. So this area here, 67, respected. So this acted as resistance. So what we are anticipating happening is the same thing happening at this previous support. We've had one bounce here. We're expecting this to come up and have another retracement. Again, we will wait on the signal, the big wick or engulfing candle at this area here. We anticipate this should happen this week. We don't have a huge distance to travel. So again, if any of these set up, we will go to our active trades and see if there's anything worth closing out of, either in profit or at a loss, because we see a better potential trade. So the last one is the USD CAD. USD CAD just took a huge drop off. We've had some excellent trades on USD CAD in this kind of area when it was bouncing about these zones. It tends to find a a couple of zones, then it will just play ping ball. But it's dropped right below this area here, and it's not been this low since April. So it's not quite over a year or anything, so it may come back down and test these areas here. So if we just draw some lines here, draw another one at this area, and another one at this area. So as you can see, I would obviously zoom in and refine them. I know I was just doing that there, they're maybe not right on. Here, here, and here. And we've even got another one down here. So we'll be very cautious here. We are waiting for an engulfing candle or a big tail. Again, at the top we call them wicks, at the bottom we call them tails. So we're waiting for a rejection in this area. This has got a big recovery to do. You can see it's dropped from here all the way down to here in the space of 17 days, over 400 pips. So what we would anticipate happening once we get this signal is, we get this signal here, it will come up, bounce off of this. Lots of people will exit the trade thinking this is acting now as resistance. It'll come back up, come down again. People will exit the trade thinking it's going to go through, but it's just coming back and retesting this before going up to this area. So that's just how we see this trade playing out. It may take several weeks, 2 weeks to play out, but yeah, we're waiting for an entry position. As we mentioned at the beginning of the video, we would give a little bit more context into our strategy. So we've made a previous video on our strategy, and basically we're looking for these big wicks or big tails. So we'll just get an arrow here. So you can see this big tail. This big tail has happened on a support zone. It may have a round psychological number. It may be a point of interest. We all know what a support zone is. This up here is a resistance zone. So the market's bounced off this area a few times, or it's bounced off this area a few times. There may be a round psychological number, or it may just be a point of interest. A point of interest, again, is where the market just shoots off. There's no support, no resistance, but at this price, the market shot off. We would mark that up as well. So as we can see here, we have a massive wick up here. We also have an engulfing candle up here. So I would enter the trade when I see this big wick or this big tail, or potentially if there was no big wick but there was an engulfing candle, it still may be enough for me to enter the trade. But there is instances where I need both, and let me give you a little bit of context. So if we come to the oil here, so let's say this is a resistance area and we are approaching this resistance area looking for a big wick or an engulfing candle. So let's say the market's down here, it's making higher highs, it's making higher lows, it's pretty steady, and it reaches this area. In this instance, because we've got nice structure here with higher highs and higher lows, we would potentially be looking for the big wick and the engulfing candle, because this is structure. This has made some nice higher highs, some nice higher lows. It's got a nice flow to it. It's building a foundation. We may even have instances where we're making higher highs, making higher lows, and then it consolidates, and then it makes another higher high into this area. So now we've got something similar to this. It's got a little bit of consolidation in there. In this instance, again, we would be looking for a big wick or an engulfing candle, both at the same time, because this is structure. This is structure. The instance that we would enter only on one of the big wicks or engulfing candles would be a scenario like so, and then it dipped below this low here, dipped below this high here, and shot up. Maybe even this to be a bit lower. So as you can see, it's not making structure. It never made a higher low here. It may even come down here, not make a lower high, not make a higher high, and then it makes a big impulsive move. And you can see it. You can see it in the charts. If you look at them enough times, you can distinguish the difference between this, this, and this. And there's a lot of discretion. It's your intuition. We haven't looked at the 4 hour time frame. You just get an intuition and a feel for the market. There's no black and white. You know, sometimes I will see this solid structure, but the wick will be that big that I will just enter off the back of the wick. Same goes here. There may be a big wick, there may be a massive engulfing candle, but only one of the two. I still might enter, although this has got structure. Again, it just depends on the size of the wicks, the size of the engulfing candles, and again, what pair are you on? Because a big wick or a big tail on one pair, on another pair, it may not need to be, you know, maybe like a 20 or 30 pip, whereas in another pair, it needs to be way bigger. So there's a lot of context to it, and it's only done through time, through, you know, reading the charts, and again, on the one time frame. The 4 hour time frame is where I spend 99% of my time. On occasion, I'll go to the weekly and daily just to find out what the higher time frames, are they bearish, are they bullish. That's it. But most of the time I'm on the 4 hour. So this here is creating higher highs and higher lows. It's creating a nice foundation. So it really needs to be a big massive wick for me to enter off the back of just a wick. Okay, same as this. This is structure to me. It's making higher highs. Yeah, it had a little bit of consolidation, but it still made higher highs and higher lows, and it's still a foundation. Then it goes up, makes a higher high, higher low. Up here, this is structure. So I'd be a little bit more careful. This is the ones that I look for where it fails to make a higher low, where it may fail to make a higher high, where it makes an impulsive move up, a big move up. The quicker it goes up, the quicker it goes down. So I hope that little bit of context made sense, and in future videos to come we can work together and master this strategy. Until the next time, please stay safe.